Welcome to our final Traders Corner of 2016, and joining me, as always, is Garth McKenzie, founder and editor of Traders Corner. Garth, welcome.
Hi, Julieta.
Garth, I think most of us will be very happy to see the back of the year, but it ended very well for you, and that's what we're going to start off with tonight, is by discussing the option structure that you had against the top 40 and how it actually paid off magnificently.
It has paid off magnificently, and I'm very chuffed about this because we've been doing these option structures quarter after quarter after quarter, and some of them have paid off for us. Often we've made a bit of money by trading around them, but this one actually really pretty much hit the sweet spot. And why I'm delighted about it is because it just shows that we have got a methodology to use in a bearish type of environment. We said all along that these things will pay off eventually in a weak market environment, and that's exactly what we're seeing here. So we've had actually a very good year, as we'll see when we show all the statistics just now. But let's hone in quickly on this option structure. So it was an option, December option on the top 40 index. It was a structure that was a put spread structure funded with the sale of a short out the money call option. So what that meant is we had a put option which gave us participation below 46,500 on the top 40 index, and as the market fell, that put option would move into the money. Now, as the market did fall, we slowly bought and went mildly long against that structure. And it ended up with a payoff profile like you can see on the right-hand side of this diagram over here, where we effectively had this no-lose kind of situation. The worst that could have happened for us was if the market had expired at 45,500, we would have made our smallest profit. And the best that could have happened for us would have been if the market had expired at 43,500. Now, where it did actually expire on the futures closeout last week, Thursday, was at 43,744. So that means it's 244 points above our absolute perfect sweet spot over there. So it means we came away with a profit of 15,467 Rand when we take the option structure as well as the long hedge that we had put in place. Basically, I mean, I put it in a tweet last week and said that this is like if you hit a golf shot and you land the ball an inch away from the pin. That's kind of what this is like. You know, it's just a little tap and it's in the hole. And we got as close as we could really to the perfect sweet spot with the structure. And as a result, we've locked in a really nice profit there, and I'm very, very pleased. It's allowed us to end the year on a high. I mean,
just remind us when you actually entered that option first, or when you created it, because it was a long time to wait for futures closeouts, and the market was kind of drifting, but then, you know, it would have little reversals, and so now it looks, you know, obvious, but it wasn't at the time.
No, it wasn't at the time. We put the structure on in September of this year. So really, we had previously a September option structure. That one expired. We then put on this December contract. And you can see that throughout the last quarter, if you look there, through October, November, now into December, the market has actually been trending lower. It's been making lower lows and lower highs the whole time. So it has looked good for us all along. But it is nice to actually land it pretty much as close as damn it to the sweet spot on the closeout date.
And you feel vindicated by using these structures because
Yeah, I do, because, you know, we've done them every quarter, and I know that they are quite complicated, and I've often thought, maybe this is not the right stuff to do on a TV show, but it's educational, and also it does give us downside participation with very little risk. You know, I'm not a trader that ordinarily likes to go naked short on the market. This allows us to go short on the market with the downside being capped if the market continues to rally. So these structures are very, very nice from that point of view, and we've done them over and over and over for the last, nearly 3 years on this show. This one is probably the best outcome that we've ever had with any of these structures. And it just shows that in a market which is bearish, I mean, this has been a horrible year for most fund managers, for most traders out there. It's been a really, really tough year. We've come out with a very healthy profit at the end of it. And you'll see now when we look at the stats, 2 of our major profits have come from bearish option structures this year.
Okay, well, that tees us into the stats, because we're going to have a review of the trades that were this year. And so I suppose the key stats are where we started and where we ended. Yeah,
well, we'll go through a couple of slides here. So yeah, basically, where did we start? We start every year with 250,000 Rand. That's money that I put up for the show, and then we trade it using the proper trading principles that we talk about on this show. So it's educational, and as well as it's practical, in the sense that we are aiming to try and make profits with the intention of then donating those profits to a good cause at the end of the year. We've closed the year now with 314,169 Rand. So that's a profit of 64,000 Rand that we've made for the portfolio. In percentage terms, 25% up for the year to date. And I think given how tough 2016 has been, I'm really, really pleased with this performance. I think it's been a great outcome for us.
Yeah. I mean, and if we dig into the winning trades, because then obviously there were more than losing trades, how did you actually fare?
Yeah, it was good. So we did 23 trades this year, which is actually less than what we've done in previous years. Most years before this, we've done above 30 trades for a year. So 23 trades is well below the average. But it has been a difficult year, and I think to a large extent, sitting on our hands where it's been uncertain has been the right thing to do. So 23 trades completed, 16 of those were winners, and 7 of those were losers. What's interesting to note here is that the average capital gain on the winning trades has been 2.2%, versus the average capital loss on our losing trades being minus 1.8%. Now, in an ideal world, that's not good enough for me. I would prefer that my average winners are between 2 and 3 times bigger than my average losers. So I think from that point of view, it's a little disappointing that our average winners were only 2.2% of capital. Average losers being minus 1.8%, that's fine. You'll know that we always do tend to risk between 1% of capital and 2% of capital on all of our trades. So it's going to always come in around about that sort of number. So I'm happy with that. I think where we probably could have done better, or would ideally have done better, is on the size of the average winners. That's a little disappointing.
And as far as the number of trades that you incurred on the portfolio, as you say, it's lower than usual. Did you feel that maybe you could have been a bit more active? With hindsight?
In hindsight, definitely I could have been more active. I mean, there have been ample trading opportunities during the course of this year, and we could have absolutely done more than 23 trades. I was probably a little bit too cautious, and I think going into next year, I'd like to maybe be a little bit more active on the portfolio, because I know that the show did get a bit stale at times. I mean, there was a stage now in the third quarter, or the fourth quarter rather, where we went 5 weeks in a row without doing a trade. And for a weekly TV show, that's probably a little bit boring. So I think we do need to try and be a little bit more active next year, but also still sticking to the proper trading principles that we always preach on the show.
Yeah, I mean, but as you say, it's easier said than done. And I mean, one could also say, oh, well, we could have just bought a couple of resources shares and gone on holiday for the rest of the year too.
Well, that's right, we could have. But I mean, again, if you would have probably not have done that at the beginning of this year, because the resources shares were looking so desperate in the beginning of the year, and yet those are the ones that have really shot the lights out for 2016. You know, and also if we had done that, we wouldn't have very much to talk about every week. So we need to keep it fresh. We need to keep the trades ticking over. And coming to next year, I'll certainly look to try and be a little bit more active than what I have been this year.
And as far as the histogram is concerned, Garth, because it's a good way of illustrating the sort of trades that you entered into. Yeah,
it's a very good way to do it. And I love looking at trading and plotting it on a histogram like this. So just to explain how this thing works. Every trade that we've done is listed along the bottom over there. So those are all the 23 trades that we did this year. And then on the left-hand axis here, you've got percentage of capital growth above 0 and percentage of capital lost below 0. So if you have a look, the red bars on this histogram indicate the risk that was assumed on each of the trades. So what that means is that you can see all of the red bars to the downside typically came in somewhere between 1% and 2% of capital, implying that we are willing to lose between 1% and 2% of our trading capital on these trades to find out whether we're right. Okay. Now, the green bars on the histogram then indicate the reward on each trade once the trade has been closed out, or the result, should I say, because they weren't all rewards. I mean, you can see we had 6 losing trades throughout the year. So those ones where the green bars to the downside indicate where we actually lost money on trades. In an ideal world, you want a histogram with lots and lots of tall bars to the upside that looks like the New York City skyline. All right, and you can see we did get that right to a large extent this year. We've got quite a few nice, tall, handsome-looking bars to the upside, indicating that those trades were profitable trades and made us quite a good percentage of capital growth. Just to go back to the average again, those dotted lines now indicate where we were in terms of average winners and average losers. So the average winners were plus 2.2% of capital, and the average losers were minus 1.8% of capital. Now, what I want to specifically hone in on here are 2 things. The first thing is the fact that our risk management here was impeccable. You can see that very seldom ever did our risk, was the loss that we incurred on a trade ever bigger than the 1 or 2% that we had actually agreed to lose on a trade when we went in. And that's critical. I think this year, if you haven't had strict adherence to risk management. And if you haven't taken proper care of your losing trades, you could have had an absolutely awful 2016. We've done that right. We managed our losses properly. The risk management for this year was fantastic. And I put that, I think that should be right out there in bright lights to say that's what you need to do as a trader. You need to make sure that your losses are small. And we got that right this year.
Because the temptation can be so great to ignore your own structures or your own strictures,
yes.
If you like.
Exactly. And that's very often where traders fall down, is they actually ignore the risk management. So they'll ignore a stop loss or add to a losing trade or do something silly like that. So it's important that you manage the losses. And I always say to clients, manage the losers and the winners will take care of themselves. The other thing I want to note here is the fact that there were two standout trades for us that really contributed about half of the year's profit. And you can see them indicated that they were both bearish option structures. So we had a bearish option structure out to June. We made 5.5% of capital on that trade. And then we had another one now to December. And you can see we made 8.8% of capital on that option structure. And those two together account to 14.3% profit for the whole year. So effectively, these two trades accounted, they carried us. I mean, basically, those two trades on their own accounted for more than half of the year's trading profit. So, and the rest of the profits were all relatively small.
And how we stacked up against the rest of the index, Garth?
It was very good. So here you can see a chart. If you had actually invested 250,000 Rand into the JSE All-Share Index at the start of the year, you can see the red line. That's what would have happened to your money. And the blue line is our Traders Corner portfolio. So you can see the Traders Corner portfolio up 25% for the year to date, and it's climbing into the top right corner of the page. And then the All-Share Index, you actually would be down minus 1.6% for the year. So the outperformance that we've seen has been phenomenal.
Yeah. And it meant that we were able to give 64,000 Rand to charity. And just if you didn't catch it last week, here's a look at where we gave the money.
Traders Corner's challenge since we started the show is always the same. Begin the year with 250,000 Rand in cash and then look to beat the market using proper trading principles. All proceeds go to charities, and in the past we've supported the Gerald Fitzpatrick Home for the Elderly, the Princess Alice Adoption Home, and recently an education initiative called Ripple Reading. Given the crisis in education that South Africa is working through, Traders Corner would like to do its bit to support valuable learning initiatives. And so this year we decided to fund a bursary scheme started by the Monaghan Montessori School.
We see it as being a really worthy cause, and hence that's why we've chosen to donate the money to Monaghan Montessori School this year. And congratulations.
Well, thank you so much. We really appreciate it, because what we try to do here is we really try to create a small environment that's about community.
The school was established in 2006 by one of the founders of the pastoral idyll that is the Monaghan Farm Development near Lanseria, just outside Johannesburg. At the moment, it has 34 students, most of whom come from the typically privileged background you might expect, and maintains a staff-pupil ratio of just 1 to 6. But the school has begun a bursary system to bring in underprivileged children from surrounding informal settlements, and is hoping to attract more funds to give deserving kids a desperately needed leg up in life.
What children that are outside of this framework, or even the strata or income bracket bring, which is actually for me very humbling, is that they tend to be very hands-on already. They're children that bring with them an immense amount of independence. So we want to afford them an opportunity to not feel like second-rate citizens in an environment. We want them to come in here and go, we actually have value, and there's aspirational qualities that children that come from suburbs or affluent environments where they can learn and coexist. And for us, that's something which is very important.
Monaghan Montessori has set out to nurture independence, learning, play, and a sense of community. And we wish them well in 2017.
Well, just to wrap up, Garth, nice one, 64,000 Rand to give to charity. So I'm glad we hadn't invested in an ETF at the start of the year.
Yeah, we've done better than most ETFs have done this year. It's been a fantastic year. I mean, 2016 has been tough, there's no question about it. But I think the outcome for us has been a best case scenario, and I'm really pleased with the way this year has ended for us.
Yeah, well done as always, Garth. Always a pleasure to have you on the show, and let's hope 2017 is a better year, and we'll see you in January.
Fantastic. Look forward to seeing you then.
Garth McKenzie is, of course, founder and editor of Traders Corner.